Greetings, beloveds. This is Eric Moab with Mother.com with a weekend market analysis for February 18th and 19th and 20th, since it's a public holiday, 2023. Remember to stay tuned for my crypto analysis. Take a look at markets here. We are down for the day. The Nasdaq is the one that is down about 1.3%. And as far as the cryptos are concerned right now, we can see both BTC and Ethereum trading up about 3.4%. For the week, US markets are, let's call it, unchanged to down. S&P 500 is down, the most, down about 0.75. And for the week, we see that the cryptos are having a good week, with Ethereum and Bitcoin up about 11-12% for the week. S&P 500 on the daily is close to dropping below 50, currently below 50. So if it stays below 50, expect the market to close towards session lows for this Friday's action. If it can hold above 50 on the daily RSI, then it should be a little bit of a negative down day, or maybe even close at the session highs, if the Dow can get going, that is. So one thing we can see with the S&P 500, we see that it is coming back to test this line here. So obviously, if you're bullish, this is a line you'd want the market ultimately to hold and bounce. And if you're bearish, you'd want to see a market break and crack this line so that you can introduce lower prices. Also, remember we are trading just above both the 50-day and the 200-day moving average right here. So as long as we're above the moving averages, as I was saying last weekend, as long as you are above the moving averages, this is still a market with an appetite for sideways to higher prices. S&P 500 also, if we take this area here, which is based on the daily closing high right here in December, early December, which turned into a resistance area right here. So what I'm saying here is the market finally did clear this area and now is coming. So we cleared it right there, tested it here successfully. And now the question is, are we going to fail, or is this going to be a break of the breakout or a breakdown of the breakout? In other words, the more we stay below here, the more we trade below the moving averages. If we end up trading below the moving averages, then that does change the picture and does invite the possibility of lower prices. But since we have to go with what we have in front of us, we can see we are trading nicely above this crossover between the 50 and the 200-day net. This is a market that is sideways to higher. Taking a look at the Dow daily, by the way, yesterday, which was Thursday, we had a sizable drop in the market as the Dow moved its daily RSI below 50. Hence, we had a big down day yesterday. And like the S&P 500, the Dow is also coming back to test the RSI lows line on the daily. So we can draw it like that. We can do it something like that. And so the next short-term trend direction is going to come either by holding support here and expect a relatively good up day when the Dow moves its daily RSI above 50. And if this is not where the Dow can hold and we break below this area, then that means that the next meaningful direction is going to be for a market to break the 50-day moving average, break the 50-day moving average, and come and test the 200-day moving average. So right now, holding or trying to find support on the 50-day. Remember, the 50-day moving average is also slanting higher. And what that tells us is we should still continue giving this market the benefit of the doubt because we have upward sloping 50 and 200-day moving average. The S&P 500 on the hourly, we can draw it as such. And we see where the market is finding support right here on its RSI lows line. So hour to hour, I would anticipate by the end of the session, which is this Friday's in the next couple of hours here, that the market should hold support here and we might come off the lows and have a little bit of a short-term move to the close unless we break this line and we see a big drop. Right now, it is leaning to support. We'll see how we close and how we open on Tuesday. S&P 500, not surprised that we haven't really been to the races ever since we came to test this resistance. Remember, we come off the highs here in early 2022. This turned into rejection here, and now we are seeing in 2023 turning into rejection. So unless and until we clear this line, we can say that the market is stuck in this range right here, stuck in this range. And because we have a crossover between the 13 and the 34-week moving average, so this crossover here is bullish and still pointing higher, just as we had a bearish crossover, and so we had to lean for lower prices here, we have the exact opposite taking place now, with the markets showing positive crossover between the 13 and the 34-week moving average. So if the S&P 500 is to move higher, it needs to clear the recent weekly closing high. And let me share with you that level. It is 407.1.70. So that's the level for the SPX. If it's going to break out, it would need to clear the recent weekly closing high. Also, the RSI would need to clear this resistance line if the market is going to move to the upside. On the weekly for the Dow, we could also say that there's an emerging wedge here that is going to potentially have to resolve. And of course, if you're bullish, you'd want it to resolve to the upside. And if you're bearish, you'd want this wedge to resolve to the downside. And of course, let's not forget there's a major trend line connecting recent weekly closing highs. So right there is another trend line that the market would have to clear to the upside if we're going to go higher. Just like the SPX, this is where the Dow has been stalling on its weekly. And so right now we continue being stuck in this sideways market. And I'm going to propose two levels to watch. There's a bullish scenario if the Dow can clear the recent November weekly closing high, and that is at 34,429.88 on the Dow. It would have to clear that level if the Dow is going to move higher. And if the Dow is poised to go down, we have another level to watch. It's December's weekly closing low. Should the Dow break below December's weekly closing low, that would be bearish, and that would be a level to watch in case we ever break down below this level. So clearly, this is a market seeking direction, which might explain why we are wedging. And so really, it's a directionless situation, in my opinion. We're either going to get a breakout or a breakdown. And of course, we have to wait for the market to lead us into which direction it wants to go. Quick look at the Dow Transports, which I haven't covered in a couple of weeks, couple of months. This is the 4-year weekly for the Dow Transports. I'm going to draw a line of search. Let's do it right there. And this gives us some indication and some explanation as to where we've been seeing resistance, especially last year in 2022. Rejection here. You got double rejection here for this stop in, let's call it October-November period. So if we are rejected again back below the blue line, that would be bearish. Now there's also another line, and this goes back to the break as we began 2022, which is last year. So I'll draw it this way based on my uniformity concept, and just take this line here, which happens to be around RSI 61.8, which makes it a meaningful area to watch out for reversals. And we see how the market did respond here in early 2022, resistance here in March, February period, and then also we are coming back here. So if I bring back the previous line, we can see how these two lines should offer us guidance. If we stay below the two lines, this is bearish. If the market uses the two lines for support and we start building, then I would anticipate for sure that we're going to be going back to test the all-time weekly closing high for the Dow Transports. So right now, this might explain why the market is sideways, as it is trying to make a decision between make or break. But if we clear the two lines, if we stay above the two lines, this market is going to have to test recent all-time weekly closing highs at the very least. One of the stocks that has been leading this market is ACS, and it's even in 2022 when the market was down big. This instrument experienced many bullish breakouts in 2022 in a very bearish market year, and recently again breaking out. So these last two breakouts for sure was sent out to subscribers, and I believe maybe even this one. But that's not the point. The point is, if you go back to the early months here in 2022, we have this situation where we have a flat moving average, which is the 34-week moving average. In essence, you have a flat moving average, 34 in this case, and then you have an upward sloping 13-week moving average, like that, 13. So for there to be a crossover between the 13 and the 34-week moving average, the only way there can be a crossover is by prices expanding to the upside. This is what I call the Moire Virgin breakout. Hundreds of videos about this on my channel. The Moire Virgin breakout. Anyway, so this here is a classic Moire Virgin breakout. The reason why I bring that to your attention is I cannot tell you how many stocks currently have that look. And not just stocks, but even the cryptos. Man, the cryptos. And even when you take a look at a stock like Netflix, you can see here the flattening out 34-week moving average and an upward sloping 13-week moving average. The only way you can get a crossover, there's only one way. And this crossover can only come when prices move higher. This is the daily, but it also works. This is the weekly, but it also works on the daily. For example, NXI semiconductor, you got a flat 200-day moving average, flat 200-day moving average. You have an upward sloping 50-day moving average. So you want to buy the breakouts in this setup right here. That's your classic entry right there. And generally that leads to a powerful spike in prices. I've been talking about this method, this concept, an original concept for like 15 years. And for some reason, it's still somewhat of a secret. How? I don't know. Anyway, ABNB recently, this is a flat 200-day moving average, an upward sloping 50-day moving average. What you want to do? You want to buy the breakout. And the breakout was yesterday. Actually, not yesterday, earlier this week. I believe on Monday. That was your breakout before you get this big gap in price. Remember, the only way you can have a crossover between the moving averages, there's only one way. Prices have to explode to be able to influence the moving averages. DKNG, which is up today, up about 16%. Again, you have a flat 200-day moving average. You have an upward sloping 50-day moving average. This scenario is playing out thousands of times right now. This is the main setup that I see in many stocks and cryptos. Your breakout was earlier this week before today's gap up. So yesterday it closed above the breakout level and today it's taking off. That makes sense. Why? It's the only way you can get a crossover between the two moving averages, the 200-day and the 50. Moving on and changing gears. The Nifty was slightly higher this week. Let's call it about 0.46%. We still continue holding the 50-day, the 50 RSI level. As long as we're above this 3-year weekly chart or 3-year weekly RSI line, as long as we're above this line, this market is too sideways, too stable, too bullish. It's going to take a break of this line to change the outlook to a bearish outlook. So the Nifty, in my opinion, still looks stable to bullish. Remember, on the big picture, I've been saying that as long as the monthly RSI is holding this line, in other words, as long as we are positive for the month and holding this line, then the Nifty month to month continues to be sideways to stable. At some point, should we break this line, then we can entertain the possibility of a lower market. Until then, sideways to higher. And of course, that holds true for Bank Nifty. By the way, as a side note, it's good to understand what happens when an instrument holds RSI 50 with uniform activity, just like we did here. And if you don't know, well, let me tell you. It suggests that there's a good likelihood you're going to go back to test the recent previous highs on a weekly basis or monthly basis, depending on the time frame. This is monthly, so you're going to test the monthly closing highs, which we did here, and we improved on them. Point is, whenever you see RSI 50 support, it is giving you an indication of possibility of retaking the previous highs or retesting them. Another concept by yours truly, which brings us back to the daily for the Nifty. And of course, everybody's watching this around the 50-day moving average. Now, of course, bulls would like to see the market holding above this well-tracked and followed 50-day moving average. We are still trading above, well above an upward sloping 200-day. So net, I would say sideways. And I would anticipate that we don't see a big push to the upside until we can clear this line, which recently became resistance again, based on the uniformity concept. So we have to clear this line if the Nifty is to have a nice move and an attempt to retake, if not test, recent daily closing highs. We would have to clear this line on the RSI daily just to confirm that we're in a sideways situation. Here we have a slightly slanting 200-day moving average and we have an upward sloping 200-day moving average. So a 50-day moving average is slanting lower, the 200-day moving average is slanting higher, and we are trading in between these two moving averages. That's a sideways market. Again, because of the weekly and the monthlies, I give the benefit of the doubt to a sideways to higher market based on the weekly and monthlies for the Nifty and the Bank Nifty. The dollar continues to be moving higher as gold is moving lower, and this is not a surprise because I've been talking about this for a couple of weeks, that gold had come to this area where more than likely it was going to stall, and it is stalling. So I would say right now gold doesn't have the strength to be moving higher. At some point in the future, the only way gold can move higher is by taking a move above this blue line. So right now, in my opinion, dollar stays stable to bullish, gold stays sideways to down. Taking a look at the XLE, which tracks the energy space, this thing is starting to roll over. We had this improvement month to month in prices. Now we have a confirmed negative divergence situation. So that in itself is not good. Negative divergence here on the monthly. Also, you might not be able to see it, so let me get a little bit closer to this. Let's go closer here. On the monthly, there have been a couple of attempts to break out above 90.22, and we can see that those breakouts on the monthly are stalling. That's a major red flag. Not good. If you take a look at the weekly, you see the same series of failed breakouts. Here, the breakout level was, let me check here, 92.1. which is this weekly closing high, I believe from November. So we had a series of breakouts, actually one attempt on a weekly chart, about 2 attempts here. This failed. That's a red flag. Now, this recent weekly closing high is in focus, because if we break that, that's going to be confirmation that we've entered a new phase. So the level to watch here, if XL is truly going to go down, is 81. This is going to be 81.84, which is the weekly closing low right there. I believe that was in November as well. Was that in November? November, early December. If we break this level, then the energy space, which was leadership in 2022, is poised for a sideways to aggressively down trend for the remainder of the next couple of months, if not for the entire year. Best case scenario would be sideways for many months and ultimately break out again successfully. Something else here we can see is, again, we have this improvement on a weekly basis with declining RSI strength. You try to break out here, but your RSI is even lower. That's a sign of a market that could go into a major reversal lower. Taking a look at crude oil, and here we're going to use USO, the ETF. Notice how it's ever since about July of last year, 2022, the RSI 50 level has been resistance. So this is a market that is increasingly showing less and less strength. And as long as this is the case, we start thinking and leaning that this is sideways to down. The only way to correct this, the RSI would have to move back above 50 on the weekly, now which brings the monthly in focus. And on the monthly, if we drop below 50 on the monthly, expect a big down month. But if we can hold above 50, that's okay, because that's just confirmation that we're in a sideways phase, and that ultimately, if RSI 50 stays good, ultimately over time, we could even break out. So I would watch the monthly RSI, because dropping below 50, I would expect a big down month. The last time we had a drop below 50 was here. We had a big down month here, drop below 50 here, big down month. So I would be on the lookout for any drops below RSI 50 and another big drop below 50 here. Another original concept by yours truly. So are we going to drop below 50? Because if we do, expect a big down month. If we hold 50, that's bullish. BTC on the 4 hourly, I'll propose 2 lines. There's this line here, which you can see a stand into support here over the last, let's call it, day or so. And then there is this break line here based on the uniformity concept. And I can also draw it as a break here. And then we can extend this line as such. So you got the red and the blue. Notice that we went here above the line, back below it for this high. And now we are above it. So what I am saying essentially is, as long as we are above the 2 lines in BTC, this is, in terms of the crypto, still a bullish phase. Now, I would anticipate things would change when we drop below these 2 lines. If we do, expect there to be a significant pullback in the cryptos, at least day to day. Remember, thousands of stocks and hundreds of cryptos have the following setup, which to me, net is a bullish setup. We got a flattening out 200-day moving average, upward sloping 50-day moving average. It's just an example. This is Polkadot, one example. Take a look at Bitcoin Cash. This is the Moade Virgin breakout setup here. Again, a flattening out 200-day moving average, upward sloping 50-day moving average. What are we waiting for here? What we're waiting for here is clearance of this area, and that becomes a new buy signal whenever it gets to that level. Ethereum, flattening out 200-day moving average, upward sloping 50-day moving average. Now needs to stay above the 1660-ish area. If it can stay above that area or level, so 16660, depending on whatever exchange, it's the recent daily closing high. If it can stay above the recent daily closing high, this is the Moade Virgin breakout setup. Now, of course, if we fail to break out, then this rolls over. We don't get a crossover. Actually, we get a bearish crossover if there's a failed breakout. So the breakout does need to stay and hold. Now, that was Ethereum. BTC, It's not a perfect, but here we have a flattening out 200-day moving average, an upward sloping 50-day moving average. This is playing out thousands of times. So this is one of the reasons why I lean towards a market that is bullish. Why? Because if these breakouts can take place, we're going to have an explosive phase. So either we're going to get a breakout, which is going to push things even higher, or we are going to whimper out, fail to break out here, roll over, and we see a bearish crossover between the moving averages, and we really see the market tanking. That's also a possibility. But if you take a look at Ethereum on the weekly, we have a flattening out. This is perfectly flat. It's the 34-week moving average. And guess what? We have an upward sloping 13-week moving average. So there's a possibility of a 13 times 34-week moving average crossover. And right now we are seeing the breakout taking place. So this is already showing signs. Unless we see another piece of evidence, this chart is bullish right now, because we are clearing the recent weekly closing high from 2023. And if that's not a buy signal based on the more divergent breakout, I don't know what is. Now, I have to say, if this fails, then of course there's no upward movement. If this fails, then of course we change our expectation. But right now, right this moment, it is breaking out. Take a look at BTC. This is the more divergent breakout on the weekly, almost perfectly flat 34-week moving average. Remember, I came up with this concept years ago. I mean, a decade plus ago. And I see this thing happening in 2023. Oh my gosh, it's amazing. So that breakout, as long as the breakout is intact on the weekly, you have to respect the possibility of a continued, in fact, an expansion of prices to the upside in the short term. You have to expect that unless we get a failed breakout. One other piece of information to consider. Right now, Ethereum on the monthly is trading at about 48.7. Remember, if we do get a movement above RSI 50 here on the monthly, if we get a movement of the RSI above 50 on the monthly, this is going to expand. We're going to get a confirmed strong monthly push to the upside. So I would watch out for that. If we move above 50 on the monthly for Ethereum, it's only going to be a bullish situation. And wait for it, month to month, if RSI 50 becomes a rejection area, then that would be net negative. But right now, we have to go back to those weekly charts and those daily charts. Those daily charts and weekly charts are showing the setup, the more divergent breakout. So I'm not going to fight this. I'm going to anticipate a sideways to a potentially explosive in the short term crypto and general market. I am Eric with Mother.com, and I leave you as I found you in the love light of the one infinite creator. Go forth rejoicing in the power and in the peace of the one creator, Adonai.